Hello, welcome to the Wealthy Trades weekly market recap and forecast. All right, this is June 8th, 2015. Let's get started right away. Last week we saw volatility continue to come back into the market, and we're kind of really bumping around these levels on the S&P 500. Let's actually just dive right into the S&P 500 right now. We're bumping around these same levels that we've been kind of struggling at this entire year. We did finally late May kind of break out of this level, and then all of June we really struggled at this, to break higher than that 212, 213 level. Now we're starting to break down a little bit. In fact, last week the SPY was down 1.02%. Not great. Remember the week before last week, the SPY was down almost 1% too. So it's starting to put in consecutive down weeks. Now, here's the thing. Why do you need to subscribe to WealthyTrades.com? Because we at WealthyTrades.com, our pairs trade, the best pairs trade that we were in was long UNH, short SWN. Now, if you were just a long only trader, UNH was down like 3.5%. But the short in SWN was up like 5 to 5.5%. So total, if you would have done the pairs trade, which was long UNH, short SWN, the trade was up 0.97%, and that's in comparison to, again, the market that was down 1.02%. Okay, that's huge outperformance, and that's one of the main reasons why you got to subscribe to Wealthy Trades, and you got to pay attention to what the trend is and the quality of the trend. All right, much like last week, we're going to do the same type of trade this week when we're going to do a pairs trade, but we're going to do it in different sectors because, let's go to the weekly. As we can see, we are still in an uptrend, okay? But the quality is below 50%. It's much like last week. But the XLY, the consumer discretionary sector, and not the healthcare sector, the consumer discretionary sector is the sector that's in the best uptrend, and that's based on the quality gauge. So what we're going to do is we're going to look to go long in the XLY, and we're going to find the best stock within the consumer discretionaries to go long. So I'm going to move all these over into my portfolio for the week, all right, and we're going to figure out what the best long position is. Last week, the best long position was UNH. UNH got beat up, but remember, we paired it with the short position in SWN, and the reason we did that was because last week the quality was below 50%, so overall that trade was up almost 1% in comparison to a market that was down 1%. Huge outperformance. Our weekly trades, if you follow along with the pairs trade and you follow along with the dashboard, our weekly trades continue to outperform pretty substantially. So let's figure out what the best long position for this week is going to be within the consumer discretionary sector. So let's use our normal pair down technique, which is let's get rid of anything. So I brought all of the stocks over into my portfolio, and I clicked on the weekly tab, and what I'm going to do is I'm going to get rid of anything that doesn't make money. All right, I'm going to scroll down and look at the levels to win profit, and I'm going to get rid of anything that doesn't make money on both sides. All right, so I'm looking here, and it's got to make money on both sides, and as you can see, most and maybe all of these, except Yum. You see Yum? What this tells me is that historically when Yum hits the counter trend side, so when it starts to sell off and it hits this counter trend side on a weekly basis, then it typically ends up closing lower. I know that because it loses money, so I'm going to get rid of that one. All right, the next filtering technique I'm going to use is I'm going to look at, so all of these make money. So the next technique I'm going to look at is I'm going to look at the levels on levels, right? So we got, I want a big spread. I want to know that how often it closes above the trend side. So Dollar Tree, for example, closed at 77.64, has an expected high of 79.35. Okay, so how often does it rally up and close above that? Well, the levels on levels is the percentage of probability, or how often historically it rallies up and closes above that. On the counter trend side, all right, it's got an expected downside low. Remember, it's in an uptrend, but it's got an expected downside low, so counter trend of 75.93. Well, what I want to know on that is how often it sells off and closes lower than that, and the levels on levels tells me that. So I want a wide spread. I want a high number here and a low number here. So we got 30 and 15.4, so we've got about 15.4% spread. Well, that's better than that. All right, so now I'm looking. I'm going to find the one with the widest spread. Well, it's better than that one. So it's better than that one. So anything. So I'm looking here. If there's nothing that has a wider spread than 15.4, then Dollar Tree, DLTR, is the one that we're going to go with. And as you can see, all of these have a decent spread, but Dollar Tree has the widest spread. So Dollar Tree, DLTR, is going to be our long position for this week. That is the best stock to go long all week long. Now, if you're if you're a long only trader, going long the XLY or Dollar Tree is the best play. But, all right, much like last week and the week before, if you're only a long only trader, then you took on some heat because the best stock and the best sector sold off, much like the market did, because there's a high correlation. Right? Just because the XLY is the best sector doesn't mean that if the market sells off, doesn't mean it's going to rally up. Now, it has the best probability of rallying up, but if the market sells off, chances are the XLY is going to get weak too. That's the reason why we use our quality gauge. That's the reason why we do our pairs trades. So I'm going to pair this week with a short position in the XLE, because the XLE, the energy sector, is the sector that's in a downtrend. And the reason why I'm doing that pair again is because the quality of this uptrend is below 50%. So I'm going to move all these stocks in the XLE over into my portfolio, and we're going to find the best shorting opportunity to pair against our long opportunity in Dollar Tree. Okay, so I'm going to move that over into my portfolio. I'm going to go over, click on the weekly, and I'm going to use my same pair technique here, and I'm going to eliminate anything that doesn't make money on both sides. Okay, as you can see, I'm clicked on the weekly here. I'm looking at the levels on levels, our levels to win profit. Anything that doesn't make money gets eliminated. So there's only one in the energy sector that actually makes money on both sides, and that is QEP. So QEP is going to be our shorting opportunity today. What do we know about QEP or this week? Well, we know that it closed at $18.81. The trend side, because it's in a downtrend, is $17.92. It has 21.2% probability historically of closing below that. Counter trend side is 1970. It only has a 13.5% probability, but here's the thing: it makes money on both those sides. So, meaning when if in a downtrend, if it rallies up and it hits its counter trend side, historically that's a good level to short at, because it usually closes lower. I know that because it makes a profit. Also, if it sells off and it hits $17.92, typically it ends up going lower. I know that also because it makes 83 cents historically by shorting at that level. So there's our trade for the week. What we're going to do is, yes, we're in an uptrend, but the quality is below 50%, so we're going to do a pairs trade, much like we did last week that was up 1%. We're going to go along DLTR, Dollar Tree, at the open, close at the end of the week. And we're going to pair that with a short in QEP, and we're going to close that at the end of the week also. So we're going to open up both of these at the open on Monday, close them both at the end of the week this week. For our day trades, again, there's not a whole lot of people who day trade. I'll get into that in a minute. On monthly trades, we are long the XLV. That is the best sector, and it's actually the best stock to be long all month long. That is down, much like the market, but we're going to stay long the XLV in our monthly trades all month long because it is the best sector. And if you remember, we rolled into this month in an uptrend, and the quality was above 50% for the month. All right, for our day trades, we're in a downtrend, and the quality is above 50%. So therefore, we're going to do a short, and we're going to look to go short and only short in our day trades. And again, there's not a whole lot of people who day trade, but if you do, the XLU is the best sector for Monday to short in. All right, so let's find the best shorting opportunity for Monday. So now I'm using the same exact technique, right? I'm gonna eliminate anything that doesn't make money on both sides. All right, much the same exact way that I did before. Remember, QEP is my a weekly shorting opportunity, and DLTR is my weekly long opportunity. So flipping through here real quick. So all of these, EIX, CMS, AEP, these are for our day trades that lose money. That one loses money. This might be real easy because PNW makes money. Okay, so it comes down to these three. So now let's look at the spread. This has a 36 and 11. Well, that's better than 28 and 17. This is 40 and 11. So NEE is the best shorting opportunity for Monday. We know it closed at 98.77. It's got an expected low of 97.94. It hits that on a very high frequency, and that It makes a profit by shorting there, and also has an expected high of 99.64. It doesn't hit that often, but again, this is a phenomenal shorting opportunity. 99.64 is a really, really good shorting opportunity. What I'm going to do is I'm going to go short at the open, close at the end of the day. That's my day trade for Monday. My weekly trade, which is one of my more important trades, I'm going to go long Dollar Tree, close at the end of the week, and at the same time I'm going to go short QEP and close at the end of the week. That is my weekly trade. For the monthly trade, as I said, we're long in the XLV, and we're going to stay long the XLV the entire month. Those are the trades. And listen, the market is struggling at these levels. I still think we're going to break higher. It's interesting. We had a good jobs number, great jobs number last Friday. So I think the market will start to digest this information and realize, yeah, rates are going higher, which means the XLU and rate sensitive stocks are probably going to go lower. But a good economy and a strong jobs market is overall good for everybody. Okay, so I believe the market will continue to rally higher. Eventually we'll get to a point where we're maybe overheated and we'll go through a correction, but just not yet. Listen, you got to understand and stay in front of the markets. Last week was a perfect example. The market sold off 1%, yet our pairs trade, which was long in UNH and short SWN, that pairs trade was up 1%. And the reason why is because we knew, yeah, the market's moving up, but the quality's not that great. So we need to do a pairs trade. Much like this week, that's the reason why we're doing a pairs trade. Let me know if you have any questions. Make sure you don't let your trial subscription cancel out. Make sure you don't let it make sure you stay in front of it. Make sure you subscribe. It's $74 a month. It's a steal. It's a steal. Last week, the week before, we were up 1.3%. Last week, we're up 1%. Over the last 2 weeks, we're up almost 2.5%, and the market's down 2%. Why? Because we're in front of the markets. We know which sectors and stocks to go long and which sectors and stocks to go short. And we know when to go short and when to go long. That's what Wealthy Trades gives you. It gives you the power to stay in front of the markets and get into the highest probability trades there is. Let me know if you have any questions. Email me at info@wealthytrades.com.